It's an absolute pleasure to have you here. My name is Heritage Adisa, and of course, I'll be taking us through our topic today, which I find particularly interesting because it's when it happens, the markets get really volatile. And the reason why it will be interesting to you is if you understand what you expect from the markets under these conditions, right? These are things that have been happening every single time. There's always one thing or the other thing driving markets or pushing prices. And when it comes to geopolitics, all year round, year in, year out, there's something. If it's not US and China, it's Russia and Ukraine. If it's not that, it's Brexit, it's COVID, right? Is global economic recovery, right? Is trade wars and tariffs. There's always something going on. Not all of them are geopolitics, but generally, right? How do these things affect prices? What do you do when you see them? How do you better prepare for it the next time it occurs? These are the things that we're going to discuss in our session today. So you're very, very, very welcome. I'm super excited to have you guys on here in the meeting, and I would like to have as many people as we can get right here on the call, right? We're going to run through this in the next 1 hour. We want to talk about what it is itself. We want to talk about, you know, past examples, the previous developments that we've seen, or what's happened over the last 5 years. We want to talk about exactly the effect that it had on the markets. We want to talk about, right, what we would do when we see them next time, basically giving us ideas of this and the kinds of assets that are mostly affected when we have such development. So like I said, you're very welcome to today's webinar. By the way, at HFM, we always try to keep constant communication with our clients in terms of education, learning, growth, right? Apart from the virtual trading floor, where we meet every single trading day, Monday to Friday at 8 a.m. to discuss market, discuss opportunities, and take them where they exist. We also have webinars that run weekly, right? This particular type of webinars come up every Friday. It's also free, where we get to talk about different topics around, market sentiment, around market fundamentals, around risk management, around trading psychology, right? And other topics that we feel can help our clients, our traders improve and be better in their trading experience, right? As they grow, right? So we do that. We have weekly trainings that run online. We have seminars, events. We have so many things in store for you. Please, if you're not a client yet, you don't have access, you don't have an account with HFM, kindly visit our website, www.hfm.com, www.hfm.com to register an account, or you simply download the HFM mobile application. Just search HFM on your Play Store or Apple Store, and then you download it and register. You're assigned an account manager that will reach out to you and also to guide you in terms of setting up your accounts properly. Guys, I want to also say this, that during the course of this class, if you do have any questions for me, any questions at all, any concerns, any examples, any question. This is a topic that, we would not look at charts so much. It's going to be more of us discussing and talking about examples. When we're going to look at charts, will be when we're looking at examples of, previous times these things occurred and exactly what happened in those periods. So we're going to look at all those things on the chart. But if you have any questions for us during the course of this session, please do not hesitate to send them to us right here in the chat, and we'll be super excited to get us going right there. Guys, first of all, where do we starting from what exactly we mean when we talk about geopolitics? That's the first thing. Right. In simple terms, just keep it simple. Geopolitics is just simply how nations relate to themselves. Right. I think that's the way I would say it. How they relate with themselves, literally. Using their resources, using their power, competing in trade relationships, cooperating, or even conflicted, right, with one another. And simply how this development affects the whole world. For those of us that have been in the market for a while, we've had times where, even within a country, you have issues, right? Political issues within a country, right? Sometimes beyond borders, you have issues, conflicts, right? Across different countries, right? US and China, that's the big one that we always hear. Now it's even US and everybody when it comes to tariffs, right? You know, Russia and Ukraine, right? China and Taiwan, right? Israel and Hamas. You have the negative ones, you have the more positive ones where trade relationship improves, other countries invest in other countries. For the sake of this class, I'm going to classify a whole lot of things under geopolitics. Maybe not all, maybe, but I'm going to classify a whole lot of these developments under geopolitics. So let's not be too um streamlined in that particular sense. Now, all of these developments, when they happen, right, the market tends to react. Generally, it affects the market a lot. And as a trader, you're looking for opportunities. You want to understand how these developments affect prices. Because if the market is affected when these things happen, it pushes prices up and down. Assets like gold, assets like the stock market, the equity markets, assets like cryptocurrencies in some cases, major currencies like the dollar, even the currencies that are directly impacted, right? These assets tend to move or react or respond when this development happens. Now, as much as yes, we can understand them, the reason why it's important to even be very clear on what they are is these things don't just happen once and never happen again. These things repeat themselves year in, year out. It may not be in the same form, it may not be the same exact issue, but generally, right, you have these things come up over and over and over again. And if you are well informed and you're well equipped, you understand what happened the last time, even though you didn't take it as an opportunity or you didn't even take trades that time, but you understand what happened, you were there, you saw markets react. Imagine how prepared you would be the next time such a development happens. That's what we're talking about. We must be able to understand, at least from the past ones, understand what it is, understand what it was, and then see how the market responded so that we too can also take this opportunity and then leverage on it the next time that we have it. Do I make sense? Right. I hope you're following me, guys. Please don't forget the Q&A is open. You can leave questions for me when they come up or when you have them. Think about when COVID came, right? I remember always saying that when COVID was here, right? At that time, I hadn't experienced any major global health crisis, right? As per trading in the market, not really, right? Little things here and there, but nothing really overwhelming for the entire world like that. And as much as I had the theoretical understanding, right, what you expect in such scenarios, it triggers risk off. Safe asset tends to do well in such environments. Risk assets suffer, things like crude oil because of restrictions in movement, right, also tend to suffer, things like that. Because we understood that, I was able to take some of those opportunities here and there. But there's no way I could have had the strong confidence to just buy gold, say from December, right, of the previous year, 2019 or November, and just let the trade till like March when we started talking about recovery. There's no way I would have that confidence. Same way with crude oil. There's no way I could have had the confidence to just sell crude oil from like November, December in 2019 and leave it for the next 2, 3 months, right? Because I hadn't really been in such scenario where I experienced, such things. I hadn't really been there. And as much as I understood what to do, go in, go out, go in, go out, go in, go out. But you see, haven't experienced it, haven't seen what the market did all through that period. We're going to do some examples and look at some of the charts going back in time, but haven't seen all of that. You can imagine how equipped I would be the next time. No, not let's not say the next time. God forbid, right? Similar scenario comes up again. Right? Because of course, if a similar scenario comes up again, because I understood, I have seen it, I can better position myself this time around to take more advantage of it. And this happens in every driver in the market. It doesn't always have to be just, big pandemics like that. Right? Central bank meetings, for example, they happen regularly. And when you understand what happened the last time, when you had such an outcome, you can know what to expect this time when you're expecting similar outcomes. And that's what we're going to apply as well to geopolitics, right? So we're going to look at exactly what it is, and then we're going to go forward to talk about different examples that we've had in recent history, right? So I'm just going to pull up my screen and just show you my board. We're going to write, just draft some things down, and then we're going to go back to the charts and then look for examples during these periods, right? Please, let's make sure we follow. So, like I said, geopolitics and trading, geopolitics is simply, how nations just relate to themselves, right? How they relate with each other. And of course, how it affects the market. Let me add that to it. Geopolitics is simply how nations use their location, resources, and power to compete, cooperate, or conflict with one another, and how it affects, right? Let me add that part to it, and how it affects the market. Affects the markets, right? So literally. Now we're going to do a few examples very quickly. I'm going to run through it right now. Now, before I even do it, let me ask you, can you remember, for those of us that have been trading before now, can you remember any geopolitical event, right, that has occurred in recent, history, maybe in the last 5, 10 years? Let's not say 10 years, last 5 years, right? Any geopolitical event that had happened in recent time like that, you remember, you want to share with us any of them before I give you some of the examples that we have, that we remember, right? Anyone that happened in 2020, 2021, 2022, 2023, 2024, even this year, 2025, right? I know this year there's quite a lot of developments, different things. But is there anybody that remembers? Please, I'd like to hear from you guys. Please, you leave me messages in the Q&A. It could help us a lot. Guys, send in messages. All right, so I have somebody says Russia-Ukraine war. All right. As you're writing it, as you're saying it, I would be putting some of them down if I agree with you as well. Right. Russia-Ukraine war, of course. I think that was in 2020, 2022, I guess, or 2023. I think that's when it started. I'll try to remember where it started. It was 2022. That's when it started. I think in February thereabout. But of course, Ukraine, Russia, Ukraine, I will call it war now or tension, whatever it is, we'll call it. Right. We have that. Somebody said COVID-19. Right. Who remembers any other one? Right. Who remembers any other? Israel and Gaza. Israel and many people really. Hamas. Many. Let's say Middle East crisis, because there are plenty. Middle East crisis, right? Who else remembers? I want to hear from you guys. I want to hear from everybody, right? Who else remembers anyone, any recent, issue like that? Brexit. I think Brexit was in 2019 now? I think so. We can try and check and be sure. Brexit, Russia versus Ukraine. Yes, COVID-19. Who else remembers? I mean, there are many more. US trade war with China, right? US and China trade war, you know, right? Which other one? Yes, trade war, right? US and Iran. Well, I mean, I'm trying to remember what it was. I know, yes, there was a little bit of, tension there, but I don't know if it really escalated up to that point. Yeah, China and Taiwan. Yeah. You remember when, Nancy Pelosi traveled to Taiwan, which was seen as US endorsing Taiwan as an independent nation, and then China was not having that at all. There was also something like that as well, right? That we also, looked at Donald Trump and tariffs, right? Those of us that have not been following the market, it's possible that some of these things you can't remember, what happened with them. But then there's so many, you know, what's it called? Develop. I'll list some of them out now, and then we'll talk about that. Someone is asking what Brexit is. Brexit is not an instrument, it's UK's exit from European Union, right? Literally, right? So that's what Brexit is. And then we had money. Let me just give you a quick rundown of some of the things that happened. Now, not everything would be tagged geopolitics directly. Some may be a bit out of that umbrella, but just to give us a little remembrance of some of the things that happened, during that period. Now, you go back to 2020, 2019. Of course, it was the COVID-19 pandemic outbreak. It was that particular time. We had like global markets, stock markets crash, prices tanking. I'll give you some examples. We'll look through that, very shortly. We had that. We also had US and China trade tensions in that year as well. There was also tech tensions there as well during that period. We had a whole lot of it. Global supply challenges in 2020, 2021, right? There was more, right? In 2021, we had more, you know, I think it was 2021 that we had, was it the elections was 2020, right? I think it was 2020 or 2019. I can't remember when it was in the US, but we had some riots in US, the Capitol riots. We had that in 2021, right? We had still global challenges as well in terms of supply. We had the whole Evergrande debt crisis. Who remembers Evergrande, the big property company in China? You remember where they had like debt crisis, that the company was going down and going under, and it affected a whole lot of things in the stock market at the time. So we had that, right? In 2022, Russia-Ukraine war started as well. We had that massively in that period where there was massive jump in the price of, commodities, oil, wheat, grains, so much so in that period as well. US, China, and Taiwan. That was the period when that happened. US and China and Taiwan was in 2022, thereabout, right? We also had that. In 2022 as well, we also had UK political drama as well. I think that was the period where Liz Truss, the prime minister that lasted maybe like 3 months or so, right? Also had to, she was also removed as well from office, right? We also had all that problem. In 2023, I know we had Israel and Hamas. That was when the trouble also restarted, because I don't think that that has ever ended before. We had that. We had some banking crisis as well. And we had US and China starting to retalk or reestablish communications as well. We also had debt problems as well in the US, talking about increasing the debt ceiling. We also had that drama there. We'll go into charts and look at how these things have affected the market. But just to give you a quick rundown of where we are or what happened during those periods, right? In 2024, right? Of course, Russia-Ukraine war has not even ended till now. So there was still that was going on. Then, of course, we had elections in Europe, in India, in US, right? We had Chinese weak economic, developments there in terms of growth. We had that part as well. We also had, I think it was, it's 2024 that we had this global supply challenges, right? Where we had ships being attacked, some of the straits being closed. But I mean, that's just that. In 2025, the big story that we've had so far this year has been Donald Trump and his tariffs. That's like the overwhelming, story we've had this year, right? Of course, Russia-Ukraine war still continues. Of course, the Middle East tension still is there. Iran, Israel, Hamas, all of that is still there, right? But of course, I think the major part of this year has been, you know, U.S. trade relationship with their allies, right? We've had so many developments right there, and we could go on listing many of them, right, on how they have been, right, all of these things. But I want us to do a few, or just do a few reviews on the chart and see what happened during this period on some of these assets, right? Very, very quickly, right? I'm going to use some assets like gold, some assets like the stock market, using US 500 as a threshold, and maybe we'd also add one more maybe dollar or dollar index. Just add a few instruments to just give us a bit of clue on what was happening during this period on these assets, right? So now let's just quickly take a look at this. This is my chart. I'm going to pull up the charts now, and we're going to look at what happened in this period. Let's start with gold. Now, in 2020, I think that's where we're going to start from. 2020, let's start with COVID. Let's look at what happened during COVID-19 in that period. 2020. This was 2020. Coming up just towards March of 2020. Let me give us that. All right, 2020. I'm just trying to make sure we have all of that. Okay. So this was in the running. This was it. From 2019, from December period. Look at gold, right? This was 2019. Remember when the COVID situation happened and then lockdowns and risk premium grew, gold prices jumped up, right? From literally from 2019, right? From towards, it was even the upside started from the end or middle of 2019, early 2019. But generally, the whole problems itself started towards the late end when the lockdowns became big, right? In December. And then price continued to climb higher. In March, where the problem reduced a little bit and then the tensions dropped a bit, the concerns were still there and price continued to climb. From late 2019 till almost mid or late 2020, gold price went up about 43%. Now, remember, when you have global, tensions, global drama, negative things happen on the geopolitical side. what happens is it triggers markets into a flight for safety mode. What that means is investors think like this. When there's global trouble, nobody is really concerned about returns at that point. What we are all concerned about is the safety of our funds. And what happens in the capital markets and the stock market is money starts to move from risk assets, assets that are, highly volatile, high risk in the sense that they tend to thrive when we have peace, right? Money moves away from those assets and move into assets that are relatively safe and are likely to keep its value through the turmoil that you have. Examples of these assets, because I'm going to go back to the chart and we're going to look at it on the chart, but a few examples of these assets that tend to do well, right? When you have this overall, negative developments are, number one, you have gold. There's no doubt about that. Right, let me see if I can pull it up on the notes too, and then we'll come back here and then we'll get some things here. Right, assets that, let me write it down. Right, assets that thrive during negative market developments, right? You have things like gold. Gold is an asset that really does that. It does thrive because of its, intrinsic value and its safe haven capacity, right? Gold tends to do well in such environments. Not just gold, in terms of forex, right? The safe haven currencies that we tag as safe haven, right? Like the Japanese yen, right? Like the Swiss franc, right? And in some cases as well, a lot of times too, the US dollar. These currencies also tend to thrive very well when you have negative developments as well in the market. This happened. The dollar, don't forget, the US dollar itself is a global reserve currency and it tends to thrive, tends to do well when you have these negative conditions as well happen in the market, right? Things like bonds also tend to do well when you have these things. Now, of course, it depends on the uniqueness of the situation. For example, if it's something like a Russia-Ukraine war where, global oil supply challenge is there, you expect commodities like crude oil to do well. So I'm saying generally, before we go into the details of some of them, assets like gold, assets like US dollar, the Swiss franc, the Japanese yen, and even bonds tend to do well or thrive better in this whole negative development that we could have. On the other hand, right, assets like, let me see if I can get um assets that do well or thrive better in more positive environments, of course, the stock markets, right? There's no doubt about that. The stock market, right? You could say equities in general, right? For currencies, you have the high beta currencies. I'm just trying to give us these examples on note before we keep doing more examples so that we know what to do with them when we see them. So the stock market, high beta currencies. High beta simply stands for high risk, right? Or high volatility. High beta currencies, right? Examples of these currencies are the Australian dollar, the New Zealand dollar, right? The Canadian dollar, right? The British pounds, the euro too, but maybe not all the time. But of course, those currencies have that, right? So you have these currencies. Now, even commodities, let me add that too. Commodities, right? Commodities like crude oil, right? Sugar, stuff like that. These kind of things also tend to do well as well under, positive environments that we could have in the market. Now, the next question will now be, all right, the next question will now be different examples that we've had. Before we go back to the chart, these ones that I've put here, gold, safe haven currencies, bonds, right, when it's negative, and then when it's positive, are usually the generic expectation, right? the general expectations. But you see, it depends on the unique situation. Sometimes these currencies and assets may not behave this way depending on the situation. Now, I'm going to just read up, a few or just talk about a few, kinds of examples or scenarios or things that could occur that could make these currencies respond a kind of way, right? The possible way you can expect. For example, when you look at the war between Russia and Ukraine, that's a negative thing. Wars are not good, although it depends on who you're asking, but generally it is not a positive thing, right? And of course, when you have wars and countries at each other's necks, particularly among nations that are very key to the global trade network, maybe they supply a major commodity that the global economy needs, or they are in charge of a major trade route that the global economy needs, or China, for example, that does a lot to facilitate global trade, right? When you have wars like that or you have tensions like that, right, as much as it should be negative for commodities, something like Russia versus Ukraine was great or is great for commodities like crude oil. And the reason is simple. A war like that often affects global supply. That's what it affects. Supply. And when it affects supply like that and reduces the availability of these commodities globally, what happens is as supply drops, price naturally goes up. So Russia is at war. They can no longer supply or they cannot supply the amounts of commodities that they were used to supplying or crude oil, produce and export like they used to. Let's say, for example, Russia exports 2 barrels of crude oil, right? Instead of the regular 10 that they're used to exporting. As an example, right? Of course, in such scenarios, the supply is now lower. You expect price to go up. War is a negative situation. But if the negative situation is that the global economy is not doing well and everybody is suffering from it, now in that example, crude oil prices will suffer because now that affects demand. So what I'm trying to say is it typically depends on the kind of assets, right? The kind of developments that we have in the market. I'm going to give you a few examples. Now, if the geopolitical development that we have, right? If the geopolitical development that we have is, let me see. Let me just add this part so that we have an idea of possible trade ideas that we can deal with in such scenarios. Now, if the geopolitical events that we have is more something around war, right? War, something like terrorism, right? Either domestic or terrorism. Help me spell that. Terrorism. I think that's double R, right? All right, I think that worked. Yeah, fantastic. Right. Maybe things like war, terrorism, unrest, right? Riots, right? Things like that. If that is what you have, right? If that's what you have, like wars, terrorism, unrest, riots, instability, right? Stuff like that, right? The ideas that make sense would be, for example, to buy gold. Gold is an asset that naturally tends to thrive under such an environment, naturally, right? Things like that. In some cases, depending on the country, if an oil exporting country, you can buy gold oil as well. I want to just add the clause for if it involves oil exporting countries, right? Of course, you could also buy things like crude oil, right? You could also look out for companies that I look at this for some stocks, right? Some defense stocks. Let me say that defense stocks. So let me give you an example. So a country that does a lot of, you know, um, producing of weapons, you know, like Lockheed, for example, Lockheed Martin, like Raytheon, right? Country companies that basically, export a lot of defense, products, right? That aid or abet, or basically just are a part of war, things that are needed during war, things like that. Right? Of course, those companies would also do well, right? Those companies would also do well in that particular environment. So things like that. If the case is, war, terrorism, unrest, things like this look good, right? The dollar too, although this depends on the kind of asset that we're talking about, but the dollar also, you know, tends to do well under such kind of conditions, right? And then, of course, when it comes to things that you can sell, let me write it down very well so that it's something that we can easily, come back to see, right? When it comes to things that you can sell, right? Of course, you expect the countries that are in trouble, right? Currencies, right? The specific country, right? Or high beta currencies. By the way, the dollar, US dollar, let me add here, Japanese yen, Swiss franc, right? So let me add that there as well. Of course, the high beta currencies are example of assets you can sell, right? Normal growth stocks, right? Regular growth stocks, local stocks, regular companies also tend to suffer in such environments, right? Equities in general also tend to suffer in such environment. If the cause is war or terrorism, these are the expressions you can have. But if it's something about if it's something about political crisis, something like, a prime minister resigns, or the House, for example, or the Senate, yeah, the House of Assembly generally is also in a different party from, the presidency, and policies will not be easily passed. If it's things like that, right? Political crisis, debt crisis, right? Things like that. If you have such situations, then of course you want to buy things like the safe haven currencies, USD, right? JPY, because this triggers risk off, right? So JPY, CHF, you want to buy those kind of things, right? You want to buy things like bonds, the same way. You want to buy things like bonds, right? I think it now depends on where it's happening, the country involved, right? The currency of the country involved. You want to sell that one. Let me not add that yet. Things like stock markets, the local stock market, right? That could also be, let's say, buy. I think that's on the sell side. Sorry, let me add that too. So on the sell side, right? So local currencies, right? Local currency itself. So for example, if what is happening, the debt crisis in UK, right? The British pound. That's what I mean by local currency. So local stocks, local currencies, those are what you should expect to suffer in such environments in that case, right? If what you have is more of a, supply problem, right? Maybe tariffs, right? If it's tariffs, supply, those kind of issues, supply disruptions, and maybe a hurricane, for example, affects, the trade route where goods and services passes on the sea, things like that. Or maybe it is a, tension, geopolitical tension in a particular country that controls a region where ships pass, right? Like the Strait of Hormuz, for example, things like that. When you have, those kind of development, if the problem, comes out from those kind of things, those kind of stories, maybe tariff, for example, the whole US, China, blah, blah, blah kind of tariffs. If those are the problems, then of course you can expect that commodities should do well, right? In such environments, you can buy things like commodities. You can expect commodities to do well in those environments, right? 100%. You can expect um, risk assets, risk currencies to suffer, right? So you want to sell things like AUD, right? You want to sell things like NZD. You want to sell, currencies like that. They will suffer. But for buying commodities, of course, you expect them to go up. Gold, you expect it to go up as well. US dollar also thrives in such environments. So it depends on the situation. So that's why I'm trying to put, the different things that could happen and could, of course, make markets feel, oh, okay, if we see this, we should be buying this. If we see that other one, we should be selling this other thing. I hope that makes sense, right? All right. So now that we've talked about these things, just a few currencies and assets that we could look out to buy or sell depending on the situation. Like I said, number one, if the issue, right, is anything war, terrorism, unrest, things like that, you can expect gold to do well, right? If it's war that involves a oil exporting and producing nation, you can expect oil prices to do well, right? If it is something that affects, say, a particular region or unrest, safe haven currencies like the dollar or the yen or the Swiss franc should also thrive in such environments. But if it's something about political crisis, you can expect the country experiencing it to suffer it, right? You can expect that. If it's something about, oh, debt crisis, the country, right? For example, when China was suffering the whole debt crisis with Evergrande, right? Chinese yuan suffered. Chinese stocks also suffered. So if it's about that, then of course selling the country involved currency makes sense. That's a good trade idea. Selling the stocks of the companies involved also makes sense. That's a good idea, right? So it depends on what the unique geopolitical development is itself. When you have such developments, then of course you can expect those reactions in the market. But one thing I want to say, you see, sometimes, right, the reactions that we get from these different assets could vary. It could vary. Sometimes the correlations are not 100%. Sometimes there are changes. As a trader, you must be able to understand that when it comes to geopolitics, markets are very, very quick to move on. I want to add this, and I want everybody to please pay attention to this. Markets are very forward looking. What I mean by that is when you have developments like geopolitics, it could be war related, it could be, tensions, it could be trade, it could be any of those things. When you have things like that, markets react very fast immediately, but markets are also quick to move on. So let's say in a case where, you look at Russia and Ukraine as an example, markets have since moved on. The war is still going on, but you can't expect that today, let's say Russia bombs a particular, place now in Ukraine or a particular military area in Ukraine. You don't expect markets to start running and go jumping up and then because we've heard this 1,000 times. It's not a new development. We have priced it in, or we can say we have discounted it. We have moved away from it. It's only if something new that has not happened before or a big development occurs that is different from what we are used to seeing, that's when you can expect markets to respond. For example, Donald Trump coming out now to say, oh, he's going to tariff China 30%, or whatever it is. We've heard this 1,000. As a matter of fact, this entire year, that's all we've heard. And markets have come to realize that for a lot of it, Donald Trump uses those talks as more of a negotiation tactic. We've gotten used to that trick, right? So you don't expect that markets would be all haywire of that. Even if market responds, right, the response may not be the most long lasting. So I want us to understand that it's possible that the reactions vary from time to time depending on the situation. You, as a trader, you have to 100% pay attention to this particular thing. Now, one of the things that help me with it is when these things happen, I don't just rely on what I think I know based on the story or my expectations. I try to read through, you know, other people's other analysts' writings, research platforms, the likes of FX Street. On our website, hfm.com, for example, we have analysis, right? If you go to the website under tools and education, you would see analysis, exclusive analysis, right? Things like that, right? I read through it to know what is everybody thinking about this, so that I'm not just thinking about it on my own. What is everybody thinking about this? What is everybody thinking about this? Right? I want to read websites like Reuters, Bloomberg, whatever I can lay my hands on that gives more clarity or insight into what is going on. Right? That can also be a big way you can also go about, trading developments like this in the market. Very, very important. Now, I'm going to talk about, some kind of, let me see, I think I put it down here. Let me look for it here. We'll do life examples shortly, but I'll just look at some assets and how they behaved during certain developments in the market. Right? I'll do that now shortly. Right. But one thing I want to add is this. Knowing the assets you want to trade, right, is not often enough. That you are buying the assets too, you must also follow the stories. You see, like I mentioned just not long ago, that markets are very quick to discount, all these geopolitical developments. Right now, except it's a very, very, very big, big, big development or a big, new thing that we're not used to or we've not seen before. That's when you can expect a big reaction in the market. But if that's not the case, don't expect any big reactions. If it's the same old story that we've heard over and over and over and over, don't expect any big, big reactions in the market. Right? Particularly when it is stale or when it is not new. It's happened before, we've heard it before, it's a continuing story, right? It's nothing different from what we're used to hearing. Markets respond more when they are surprised. I want you to take note of that. So, in a case where things happen that we're not surprised, it's something that we're used to hearing, do not expect markets to overly react. So, I don't want you to jump on trading instrument just because, oh, I saw this headline. Or for example, you see a headline now that um, Donald Trump is threatening Fed Chair Powell, that's the chairman of the Federal Reserve, to cut interest rates. As an example, just to deviate a bit. Now, of course, that seems like, oh, it's a big deal saying he could fire the guy. But I mean, for those of us that have been in the market for a while, we know that that's not a new thing. It's not a new thing, right? If you're new to trading, you could look at something like that and feel like, oh, this is a big deal. Oh, I want to go and say, sell risk assets because of that. But we that have been trading before now know very clearly that it's not a new thing that, we want to, move on or jump because, no, not necessarily, right? Because we've seen it 1,000 times before, right? So now I'm going to give us a few examples. Let's just quickly do life examples. Our time is running, right? Just open up the chart and I'm going to show you maybe like 2 or 3 times where, with the date and time, where the market responded a certain way to certain developments. I'm going to start with the British pounds, right? So I'm going to look at pounds. First of all, I'm going to show you, maybe we've looked at gold already. Let's start with that. We've looked at gold already. What happened during COVID, right? If you look more, forward as well, when we started having other developments, do you see other reactions? But let's check something like pounds. Pounds against the dollar, when you look at 2022, I think between, around September 2022, right? When the whole problem with Liz Truss's government started on the mini budget, right? I think the date was September 22. I think it was the 26th of September, where pounds fell quite heavily, right? So let's check that. September 2022. I want to just show you so that we're very clear on these dates. September 2022. I think this was it. This massive candle here. Let's just be sure. This is pounds USD. This September, right? September. Fantastic. Let's just zoom in a bit on that particular period and then see what happened in the market through that period. I'm going to drop that a bit to the daily time frame, and we're going to look for that particular, you know, period right there. Here you go. Now, this is it. September 20, is it 2022? Right, fantastic. 22, 23, this period, right? Around this period, you'll notice what happened between this period, right here to right here. So what happened in that time was the government of UK at the time, led by Liz Truss. Liz Truss is the prime minister, right? Tried to launch a new budget, right? A mini budget, basically, and that really sparked a whole lot of political negativity right there, right? In UK at the time, and you notice what happened to the pounds through that period. Pounds fell quite heavily, through that period, right? Look at Israel and Hamas during the whole conflict, the whole Middle East drama in 2023. I think that was October. I just put a few things down, right? For gold, let me look at the gold as well. In 2023, during that period, 2023, where's 2023? So this 2023, I think that was in October 2023, right? Look at October 23. Now look at through October to like November, literally, right? Right from here. This was October of 2023, right? From here to this particular point here, literally. All through history, look at what gold did, literally moving higher, moving from around 1800 thereabout, 1810 to around, $2,000, per ounce. Gold did about 14% rally in just these 2 months during the Israel and Hamas drama, when Hamas attacked Israel. You remember that period where Hamas attacked Israel and Israel retaliated? All of that, when it happened in 2023 as well, look at that upside that we saw in gold all through that period. If you even want to take another example and look at maybe during the whole Russia-Ukraine war and what happened to crude oil, how crude oil prices also jumped quite heavily, right, through February to March of 2022. Let's look at that. So US oil, look for US oil thereabouts, just during that period to give us this US oil, this is the spot market. All right. So US oil too as well. Let's look at 2022, early 2022. 2022, just to give us a few examples of what is it that we expected or we saw during that period. 2022, I think that was February now, February 2022. Right here. Good. This was it. Between that February, when the whole war started, look at it here. I can't remember the exact date, but I know it was around 2022 thereabout. Now, this is it. February, right from here. Right? Let's just pick this range here to like early March. Now, look at what happened in that period. Look at that period, right? From February 2022 to like early March. You can see what gold did, oil did, right? From around $90 per barrel, near 91, price went as high as $126, $25, per barrel, right there. Moving up about 30%, 37% all through that period. This was when the war started between Russia and Ukraine, where they invaded, literally, where Putin called it a special military operation, and the war started. Crude oil, because it's a major commodity that Russia exports, that led to a lot of sanctions. And when we had the whole sanction thingy, right, Russia could no longer export so much from the financial system. They tried to remove Russia from the whole financial system network. A whole lot of things happened in that period, and crude oil prices jumped heavily during that period. The reason why I'm showing you these examples of what happened during those periods on the chart is to show you that it's happened before. It's not a new, it's not a new development. It's not something that, we are just saying abstractly. The charts show. And if you understood what happened with those developments, those geopolitical developments, right, you could have taken those opportunities. These were month-long developments right there. And it also prepares you for a next time where something similar happens again, right? If those things happen, something similar happens again, you can also be more prepared to handle this. Right. We understand that for our clients, some of us are very new to trading. Some of us, have been trading for a while, but don't have, so much information in that sense, right, about these things. And some of us are new. Now, if you're new to trading and you don't have that information, you're not sure what to do about these things, right? Please always make sure to follow up with the analysis that we drop, the things that we talk about every day when we meet at the VTF. We discuss these things. So when you understand what is currently happening, it can help you know what assets to avoid completely if you need to avoid them. It can help you decide what assets you should actually trade if you're buying it or you're selling it, right? It can also help you know that. It can help you also know as well what else you should be selling, what else you should be buying. These developments can help and propel you as a trader to make the appropriate decisions and knowing what to trade, finding opportunities and taking them well, not just light ones, but strong ones. Geopolitics are one of the big drivers in the market. And as traders, it's important that we also pay attention to them, when they occur. I hope we are learning something. I see we have a bit of, some questions here. I don't want to hold us longer than 12 on 1 o'clock. I say we have some, comments here. I want to quickly, run through that. If you have questions for me as well, please do send them in and then we can take them right here. Does events like 9/11 count as geopolitics too? What about nations' political elections or prime minister elections? Now, 9/11 is definitely a geopolitical development. Of course, it's not in this list because it happened in 2011, right? So it's not in this list. But of course, it's a major geopolitical development as well. When something like that happened, I can classify it under the wars, right? Let me see. Let me go back to that note and show you where I had it on the notes. I'll classify that under the wars and under the whole I think I wrote it here, right? Wars, terrorism, yeah, under this, right? So you expect things like gold to do well, right? Things like defense stocks to jump, things like bonds, these are what you expect under that example. So yes, right? When you have things like 9/11, or God forbid we have another one, but when you have terrorism like that, in that sense, that's the reaction you should also expect. How about nations election? It depends on the nation, to be fair. Countries that have a big, influence on global trade and global market developments, right? Of course, will the elections will be very important. Things like I wouldn't say there are any elections in China, right? In that sense, the one supreme party have always remained, but in places like U.S., for example, right? Because of course, conservatives and you know the Democrats, right? They have different ideology when it comes to policies. So of course, things like that can. But let's say a country like Nigeria, for example, right? Not to say this in any negative light, but a country like Nigeria, in terms of global impact or how our political landscape affects the global economy, it may not be as strong as some other nations. So you don't expect our own elections to affect the global market or global economy in that sense. But a country that is at the very core of global trade and global supply and global relationships, right? When they have elections, that carries a lot of weight, right? The likes of UK, the likes of US, right? The likes of China, if they have one, right? Those kind of countries also would have, those big Germany, right? France, right? Europe in general, right? Those kind of countries would have or those kind of elections would have big impact in the market. Last year, during the election, I think Trump was announced. I think when Trump was announced, a lot of assets were affected, especially cryptos and stocks. This is why I asked, of course, 100%. Right? I'll give you an example with the dollar. What happened with the dollar, during that election? Now, let me show you. Right. So you pick the dollar index as an example. Where's it? Dollar index. Where are you? I think I have it opened. Right. This is dollar index, right? Right. So now you look at the dollar index. Let me just see if I can clear this up. Okay, I don't want to clean this one. Let me look for another one. Open another. I don't want to clean what I have on the board up. So let me just quickly pick another one. Dollar index, fantastic. So now you look at dollar index and look at what happened through the election period, and then you get the story, right? So election from September to December, from September when it started becoming clear, so now of 2024, when it started becoming clear that Donald Trump was going to win, right? Literally from September ending, can you see it? We saw dollar start to rise, rally strongly, right? All through October, November, December it started. When he resumed in January 20 thereabout, I think January 20th, that was oops, that's cleaned up. Let me take it back. When he resumed on the 20th of January, here. On the 20th of January, this was 20th of January here, that Monday, right? And he started to, day one, executive orders. It became clear that, oh, this whole tariffs are also a negative for the US. Dollar started losing value strongly, right? And that continued up until middle of the year, 6 months. Now, of course, since then, it's been a case of, oh, okay, negotiations, lifting of the tariffs, deadlines are being passed. It's just negotiation tactic, right? It's been like that for like the last 3 months, since June, literally, right? And markets have not been able to you know, um, pick a side since then. It's just been a flat up and down movement since then. So political developments also affect markets and price. And if you understand them too, you can as well use or take advantage of them and take opportunities when they occur. Is euro not among the safe haven currencies? No, it's not among the safe haven currencies, right? I think it's more on the high beta side. But think about it like this: is the least high beta currency. That is, if you're going to count high beta currencies, it'll be there at the bottom. That's why I didn't even write it. When you have these big reactions, it's not the fastest to respond. And sometimes it can even act as maybe a safe haven, a slight or a soft safe haven currency. But of course, that in itself can also have, an effect in the market. But if I'm going to pick or trade high beta currencies, I'd rather buy things like AUD, buy things like NZD. Those ones carry a lot of weight in terms of reactions than something like the euro. Does that make sense? Right. Someone is asking here that what about wildfires in Australia? We had some earlier this year. Did it have any significant effect on the market? Well, if the wildfire is big and it affects, major areas, right, it would affect the Australian dollar. It could affect Australian stocks, right? It would affect that. But in terms of global development, right, not necessarily. It can cause risk of, it could be, some light one, right? But in terms of massive global reactions, not necessarily, right? Um, sorry. Somebody reminded me that 9/11 was not 2011, it was 2001. Sorry about that, right? Let me see. Was it 2001? Hold on, no. Somebody remind me. What date was that? Was it 2001? Why does it feel it can't be 2011 too? Was it? I'm not certain. I'll have to confirm that whether it was 2011 or 2001. But I think it should be it's September now. September 2011. Anyways, we'll confirm that. If somebody remembers, please do confirm that to me very quickly. Right. This one says, where is Switzerland in all of this brouhaha? Right. There's hardly ever any mention of them in virtually any topic. Why leave it out? All right. Now, let me quickly answer this. Switzerland, Swiss franc, CHF, it was mentioned, is in the list, right? Is a part of the safe haven currencies and assets, right? Thank you, Winston. Yeah, it's 2001. Why did I think it was 2011? Anyways, it can't even be 2011 is close by now. 2010. What happened in 2010? Ah, okay, 2001. Thank you. Yeah, 2001. Thank you. Now, Switzerland is also an asset, right? It's a safe haven asset. And as a safe haven asset, as safe haven assets, right? It thrives in a negative environment. You see, when things like 9/11, things like terrorism attacks, things like wars, things like, trade issues, trade tariffs, oil price wars, things like that happen, negative developments like that happen. Of course, you expect currencies that are tagged as safe havens, the dollar, the CHF, right? The Japanese yen, currencies like that, they naturally tend to do well, move up under that condition. So it's not as if it is, totally left out. It's just that when it comes to data, day to day, not all the time do you see developments in Switzerland, over the news affecting everybody. Not a lot of times. Not a lot of times, right? You don't get to see the way you have Australia always in the news, right? Or US always in the news like that. You don't get to see a lot of it of Switzerland. And even when you do see them, you're not you know, getting big reactions from it. Similar story with the Japanese yen too. Japanese yen too is not the biggest, reactor when you have developments in their country, like data, when say unemployment in Japan now, you rarely see the Japanese yen move because of something like that. You understand that? So, Switzerland is a currency that you just want to hold on to as a safe haven and buy when you have negative developments, sell when you have more positive development. Thank you, Winston, for that. Let me see. Thank you. September 11. Oh, September 11. Yes, September 11. That's the date. Thank you. September 11. So that's where the 9/11 comes from. September 11. It's 2001. Yeah, I remember that now. Thank you. Let me see. I've answered the CHF question as well. Thank you, Winston, for helping me with the dates. So it was 2011 that Osama was killed. All right. Thank you for that. All right, guys. But I mean, based on what we've talked about so far, I want to just see if we have any questions on what we talked about today. Right. I'll try and see how we can get the video posted online later on. But of course, generally geopolitics is just simply the relationship between countries, how they relate either positively or negatively. And these relationships, these trade relationships also affects, the markets, assets, stocks, commodities, bonds. So as a trader, you want to also understand how to use these developments and how they affect price so that you too can also take the opportunities, buy when you should be buying, sell when you should be selling. You don't want a situation where you're not, aware, or you're not trading in the right direction when these things can provide good opportunities for us to trade, right? Please don't forget that if you have, can you help us on the screen, the write-up? For late comment. Okay, let me see. I'll just put it up now. In case you want to take a screen grab or, a screenshot, you can do that. Just a little bit of, small notes. That just gives it just a little bit of insight into, what we talked about today. I think it can help us as traders, right? So you want to take a screen grab, please do that. So I think we can start from here. Let me see if I can zoom out a bit so that you can just grab it at once. All right, so I think this helps. So you can take this as one shot, right? Aha. And then we'll do the other side very quickly. I think we've done that. Good. And then, of course, this other side has one shot as well. Right. Fantastic. And then we can also take that as well. All right, guys. I mean, I want to believe that we've learned something in the class today. It was quite one that, we talked about your politics and then the assets that you can trade and then examples and of course the different kinds of geopolitical developments and how you go about trading it. I want to say thank you to everybody for being here this afternoon. And I'm sure we've learned something. If there are any questions that you may have, right, maybe after now, you can send us a direct message and we would absolutely respond to it. Thank you so much for being a part of today's session. Do take care of yourself. Enjoy the rest of your weekend. And of course, it's goodbye for now.